Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 23rd of May, 2022. Thank you for tuning in. I'm glad to have you guys here. Well, let's get started right away, and let's open up the charts right here and take a look at what's going on. Americans have lost 20 trillion since the start of 2022, according to Zero Hedge. Now, I'm going to tell you guys what. You remember the period in time a couple years ago, maybe, I don't know, maybe 3 years ago even, I was talking on this channel about a deflationary spike event, what I called it. And I said it's coming in the future. It's going to come before the hyperinflation. I said, and it's going to see us move toward deflation, things deflating. And this is the reason why I told you guys to put away $5 bills, because what this could lead to, I'm not saying it will, but I'm saying there's a very strong possibility that this deflationary spike event that we're in right now it's occurring. I mean, back then it was just talk. I was just talking about it coming in the future. It's here now. We're in it. I've never seen the economy plunge so hard, so fast. We are in a recession, even though it hasn't been legitimatized. In other words, they need 2 consecutive quarters of negative GDP. We're moving down so fast, the economy, that they don't have time to get 2 quarters of negative GDP. It's happened already. It's here. We're in a recession, but we're moving rapidly toward a depression. And this is the period in time I told you guys about to have your $5 bills, because the reason why is we could very well have a credit crisis, a crisis very similar to what happened in 2008, except this time the credit markets could possibly freeze and interbank lending could stop. All it takes is just one big player out there, too big to fail, that fails, because liquidity is draining out of the system at such an alarming rate. The derivatives markets could actually start to implode. The debt market could go wild. I mean, the whole thing is just like, right now, it's just like being drained. It's like a person, you know? Picture the financial system like a person. You know, they have blood coursing through their veins. If something were to happen, they were to lose too much blood, what happens? They could pass out. They could just all of a sudden be walking along and all of a sudden just drop on the ground. What's wrong with that person? Well, something happened to them. They lost too much blood. Maybe they got internal bleeding or something like that, right? Well, that's the way with the system. The Fed is the liquidity within the system acts like blood for the system to keep it running. Right now, the Fed's draining it out, draining all of that out. They're draining the liquidity out, and they're talking about moving faster toward draining the liquidity out of the system. Much faster. This is a credit-based system that will not stand this, what the Fed's doing. Now they're talking about doing quantitative tightening. They're going to keep going. And we very well could have a credit freeze right ahead. And that's where you need your $5 bills I told you guys about. You need them to last you a few weeks, maybe a month or so, while the credit freeze is on. Because they're not going to take anything except cash. If we get a credit freeze, and interbank lending stops, and everything, the financial system actually freezes up, well, you're going to see a situation where you go to the store and they say, oh, we only take cash today. And you're going to go to your bank to get cash. You're not going to be able to get it easily. I'm not going to say you're not going to be able to get it. ATMs might have cash, but there might be a big long line. This is what they went through in Russia not long ago. Big long lines at the banks trying to get cash. They could come here with a credit freeze, but I'm not going to say that it's going to last forever. It would be one of those situations that lasts for a week or 2, or maybe 3, or maybe even a month. And that's when the Fed would have to capitulate and restore the financial system, to unfreeze it during that period in time. and it requires liquidity, tremendous amounts of liquidity. So this 20 trillion that they drained out since the start of 2022, they'd probably have to put 20 trillion back in to get it back. Again, what's the sense in all this nonsense? They can't possibly let the system completely collapse because it's all credit based, the whole thing. It's nothing but credit. That's all it is. You take that away, there's nothing left. So, yeah, everything's starting to turn down. I mean, what's this chart? It says U.S. household net worth on the S&P 500 is turning down just like the stock markets. That green line there, heading toward the credit freeze. This is what they're creating, is a credit freeze. Anyway, let's move on and take a look at silver today. It's down, it's 13 cents up. But we see the same move downwards when New York opens up. We see it's all paper. They're manipulating the price through paper short contracts. But we're at 21.87 on silver today. You guys got to prepare for this. A lot of people out there, all they use now is their debit card or their credit card or whatever, a card, you know, to pay for things, you know, and they keep almost no cash in their wallet and they keep almost no cash at home. Well, if a credit freeze hits, they're not going to be able to feed themselves. And what if it lasts a whole month? What are they going to do? You know, I mean, you guys got a few $5 bills out there. $5 bills are great because they're easy to cash. Everybody will take them, make change, see? They're making change. It's easy to make change with them, you know, because they're already practically change. But nowadays, considering what the dollar's worth now, $5 bill is like nothing now. It's easy to change. And it can act as a go-between if there's a credit freeze to keep you guys be able to buy some groceries and stuff. Because I know there's a lot of talk out there about how we might starve and all this kind of stuff. Here in North America and in the United Kingdom and stuff, I don't think we're going to starve. If you got money, I think you're always going to be able to go into the grocery store. But how much is it going to cost? This is the thing. And if you have money, these are the two big question marks here. Because I could see food prices going up incredibly high over the next little while. And wages are stagnant. You know, the economy is stagnant. And that's just lucky if you can get a job. I'd say if you got a job right now, hang on to it. Even if it's not that great a job. Because I'm going to tell you what, the Walmart and these different stores like Target and stuff, they're going to probably be laying off employees very soon. There's going to be a lot of people coming into the workforce looking for jobs. And all these jobs, excess jobs like in North America here, probably evaporate overnight. And the job market might get tight again, too. Everything's turning sour out there. And I want to talk about that monkeypox thing just for a second. There's a very strong likelihood that it's been actually out there for quite a while and they just didn't notice it. Spreading through certain parts of the population. That would be a good thing if that's the way, if that's what's happening. If it's not some new strain or something that's more contagious, that would be a bad thing. And we're going to have to wait it out right now and find out if it's one of those two options. So it very well could not amount to a whole lot, depending on if it's been traveling through the population unnoticed, like spreading underground, so to speak, you know, for a period of time now, and just was off the radar. And then they found it and they said, hey, we got all these cases. That's one thing. Or if it's spreading really fast and it's some new strain that's highly contagious, that would be another thing. Don't know which at this point in time, but there's a strong likelihood that it is just been spreading and they just didn't notice it so much. And they caught on to it. And then they said, hey, and once they looked for it, then they found it. There's a strong possibility of that. And so right now at this point, it's something that should be on our radar, but something we probably shouldn't be overly concerned about at this point in time until we get more further information. In other words, don't panic. I'm just saying don't panic over the situation until we get further information on which it is. If it's the same monkeypox that we've been dealing with for a very long time, and we know how that functions, we know it's quite difficult to catch because it's not extremely contagious like COVID was. That would be good if it's like that, if it's the same old monkeypox that we've been dealing with all along. But if it's some new strain that's more highly contagious, that would be a problem. So that's what we're watching for right now. And we're going to keep it on our radar, but we're not going to be overly concerned about it. We're not going to panic, in other words. So that's the monkeypox. Anyway, let's talk about cryptocurrency for a minute here. Did we do gold today? Gold today it's up $9.20 at 18.55. So gold looks like it's up a little bit more than silver. Let's take a look at crypto today. 1307 in billions. It's up 30,192 right now for Bitcoin. 30,192. There's going to be big winners in all of this because if there is a credit freeze, it's going to give the Fed the excuse that they need to go back to easy monetary policy. And I mean, it would be more than an excuse. It would be a real catastrophe if there's a credit freeze, and they would have to go back. They'd be forced to go back because they've told you all along. They've said this is data dependent. What we're doing is data dependent. And if the data turns south, you know what they're going to do. And people forget that. They think, hey, they buy into this whole thing that the Fed's going to continue tightening forever, and they're going to make a play on that. They're going to say, hey, we're going to make the deflationary play in our finances. We're going to go all in dollars. We're going to go all in treasuries, and we're going to go all in for that direction toward deflate because they think it's going to go toward deflation because they're buying into the Fed, what the Fed's telling them. And the Fed's just bluffing, really, because they've told you all along this is data dependent. And yeah, they're making big statements. We're going to do this and we're going to do that. They're trying to hold the dollar together a bit longer is what they're doing. And they've been very successful at doing it. But they're going to get called on all of this. And pretty soon, probably this summer, they're going to get called. And then everything's going to turn in the opposite direction toward inflation. And there's going to be a massive run out of dollars and into alternative asset classes that are out of the dollar. And there's only three doors: gold, silver, and cryptos. And yeah, cryptos are not doing so good because they're more of a speculative investment rather than gold and silver, which are a rock solid safe haven asset. You can take your choice where you want to turn, gold, silver, or cryptos, to get out of the dollar, but there's only those three doors out. Those are the only way out. And those investors, when this thing flips sometime this summer and the Fed goes back to free and easy monetary policy to support the system, there's going to be a mad rush into those asset classes. And we're going to see, that's what you guys been waiting for all this time, and it's coming. It's coming at the end of this deflationary spike event that I've told you guys about this for like 2 years or 3 years ago. I was telling you about this deflationary spike event. That's what I call it. Because everything's going to spike downwards, like a spike drives into a piece of wood, And everybody's going to think deflation. And I also said this, that the deflationists out there are going to be shouting, hooray, we were right. And right now we're in that period where they're going to start to say, hey, we were right, it's deflating. just for a very short period of time, they're going to be right, because deflation would completely take the system out. And the Fed's told you they're data dependent. They're not going to let that happen. Come on. Come on, when the markets all start to fall, when the Dow starts to go down below 25,000, you think they're just going to stand there and say, hey, we'll let it go to zero? Yeah, sure, right. We're going to let the property market all fall to pieces. We're going to let all the asset bubbles burst completely. And we're going to lose power, because at a certain point, the people are going to go nuts and take us out of office. They think they're going to stand by and let that happen? No, they're going to maintain power, but they're all bluffing right now. They're bluffing. They're only going to let this go so far. They already know. They've already got it set. They know how far they're going to let it go, too. They're just not telling you. They've got a set number on all the markets where they're not going to let the markets cross down below those numbers. They're just not telling you. And so if you're making the play for deflation, you're thinking deflation's going to rule the world, the markets are going to fall by 80%, I'm going to be rich because I'm all in cash. When this thing flips, it's going to flip overnight, and it's going to catch you with your pants down. And it's going to go back to inflation, and it's going to be a mad rush out and into these asset classes like gold, silver, and cryptos, which are going to then explode in price, and you're not going to be able to get any gold and silver then. It's going to all disappear. It's going to vanish, and I said this for ages now. It's going to vanish like spit on a hot stove. Psst, gone. Gold and silver. And then they're going to have to turn to crypto, because there's still going to be so much liquidity pouring around out there, with the Fed pumping it out like crazy. Back to pumping it out like crazy. It's all going to chase after crypto then, and it's just going to absolutely be the bull market you've all been waiting for in crypto as well. And the stock market's going to do great then. It's going to go to the moon. Everything's going to go up, financially speaking. The wealth effect's going to come back. This is just a little hiccup, a little bump in the road. And I call it the deflationary spike event. We got to tread carefully through this period. And don't be shaken out of the tree. Don't let them shake you out of the tree. If you got silver and you got gold and stuff, don't let them shake you out of the tree. Because you only take a loss when you sell at these rock bottom prices. You know? Of course, gold and silver's been holding up pretty good. But the cryptos, I mean, you only take a loss if you sell at the rock bottom prices. Don't let them shake you out of the tree. And these prices might get worse, but you got to have strong constitution for it. I was going to say something, the B word, but you got to have a strong constitution for it, okay? You got to be tough, guys. You got to be tough. Anyway, I know it's hard when you see prices falling on gold, silver, and cryptos, because that's the mechanism of this Fed. That's what they're doing. It's all they're doing. Dow Jones today, 371 points up, 317 up. I'm going to tell you, Dow Jones is on shaky ground today, but I told you that they were overcooking it. They were knocking the markets down too low, too quick, and I expected this little bounce, and the markets to restabilize over the next couple of weeks. Then all of a sudden, it's going to take another downturn. Because we're not through this deflationary spike event until this Dow Jones number is not in the 30s anymore. It's going to be in the 20s. Probably thinking it's going to go as low as 25 before the end of this deflationary spike event. That's when they're going to end it. They're going to be forced to end it. They're not going to be able to go any further. They've pushed as far as they can push, and the system is starting to freeze up. Very well could lock up the system into a credit freeze. We'll have to wait and see if that happens or not. It might happen, it might not. That's why you need those $5 bills, guys. The credit freeze is a serious thing. It's like everybody be rushing into the bank trying to get cash to pay for their life rather than using their debit card. Okay, so now what we're looking at is crude oil at 110. Move index 110. And there we go. We're looking at the same as 111 for the move index, and 110 for oil. The move index is sliding down, starting this first time in about a year. It's breaking through these trend lines to the downside. Take a look at bonds and rates today, and we're looking at climbing yields. 2.18 on the U.S. No, 2.81. A little bit dyslexic there on that. On the 10 years, 2.81. And it's up 3.2 basis points. In U.S. 30 years, 3.01, and it's up 2.2 basis points. Let's take a look at the U.S. dollar index, which is at 102.28, and it's sliding today a little bit. Even with all this stuff that they're doing, they're having a trouble keeping the dollar index up. Destroying the economy right now. Right now, they're in destruction mode, and then they're going to have to come along and try to fix it after they've reduced it to rubble. It's going to take a heck of a lot of money to rebuild the whole thing again and bring it back up to even normal levels. You know, what they're creating is, they're creating a depression that's going to quickly change. It's going to be everything's deflating. Then they're going to come in and try to rescue it, and they're going to create a hyperinflationary depression. It's not going to improve. It's going to improve for a few people that are holding a lot of crypto, gold, and silver. Things will improve for them because it's going to make them, I don't know, it could be like 10x, you know, I mean, or more. But anyway, for the average citizen out there, it's going to be just sheer hell. Hyperinflationary depression is, the Germans went through it during the Weimar Republic. It's just pure hell. Anyway, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.